Today is Monday, the 17th of August, and coming into the market open today after last week. The uptrend still remains for the most part. It definitely hasn't felt anywhere near as strong as the uptrend that we saw throughout April and May. But ultimately, this breakout is holding, and prices kind of chopped around throughout last week and the week before to allow for the 10-day to catch up with price, especially in regards to the S&P. Um, Similarly for the Nasdaq, the keys, consecutive prices above its 50-day, which is definitely constructive. Also, kind of not really moving too much, more very slow grind higher, but also allowing the 10-day to catch up. And now that it's clearly above the 50-day, and the 20-day is sloping higher as well, it's definitely constructive. But with the Nasdaq, it's clearly approaching this overhead resistance supply area. So there's a lot of key highs. This being the first one that's coming into, and then these ones here at all-time highs. So it's clearly going to need something really, I guess, as a catalyst to push it through this level without any struggle. And if that isn't there, if it doesn't have a clear if the market doesn't have a clear catalyst to I guess take on risk and really push things higher in a meaningful way, I wouldn't expect it to cut through this area with much with much ease, without much resistance, based on just everything else that's happening, which I'll get into in a sec. The IWM did have a really strong close near its highs on the week, and probably looks the best out of the lot. Hasn't had a super clean last kind of leg up, but is still trending higher, is riding the 10-day pretty well, just ahead of it rather. And yeah, the weekly close was super strong for the IWM, so it looks the best out of the lot for sure. The Dow is the clear laggard of the group, the daily close below the 10-day, but ultimately nothing too major, and it looks like it's kind of flattening out here. So I wouldn't be surprised to see it kind of chop around a little bit to allow the 20-day to catch up. But even though it's the laggard of the group, it's not really a cause for concern as of right now. The VIX is still towards range lows, so nothing really to report on that. Volatility is still low, no spikes there. I guess the lower we go, the more it paves the way for a spike of some sort to enter the market. But as for now, there's no signs of that. The dollar index has made new lows, new swing or local lows as of today, but ultimately these higher time frame moving averages are holding as support. So I guess what I want to see is these moving averages continue to hold as support and allow price to consolidate a little bit more, or just push straight through, which would be constructive for equity prices. But it kind of looks like it's these are going to hold, and it's actually paving the way for a slight move higher, in my opinion, based on everything else that I'm seeing. So in regards to gold and silver, they still remain at this kind of inflection point where it's basically is this trend continuation, or is it trend deterioration? And the 10-day is really kind of holding looks like it's holding quite well as support as of right now. There's clear overhead resistance in regards to the high time frame moving averages, but ultimately over this past month, gold and silver miners have been the clear leader, and they're outperforming pretty much every other sector as of right now by a pretty decent amount. So it wouldn't surprise me to see strength remain in precious metals and copper as well. It doesn't trade, or it doesn't trade super cleanly, but the fact that it's pushing up near all-time highs is something to monitor. I don't really feel like copper's been the biggest of signals throughout this past year, but and I guess that's in regards to typically, from what I understand, that copper, when copper's strong, the economy's strong. So if copper's strong, then really equity prices should remain in their uptrends, and The market should be optimistic about the outlook of the economy, but really that's not kind of presenting itself in regards to the bond market, because the 30 years looking extremely poised to break out from its current highs. The 10 year similarly in a similar position. The 5 year has kind of slowed down a little bit. This was a clear rejection week, a clear rejection day on Tuesday last week, but ultimately the 50 days holding strong. The 2 year looks the worst out of the bunch. The clear trend deterioration in terms of this clean trends that we had, I guess, throughout April into late July, but because there's been no massive moves, I wouldn't be surprised just to see this kind of chop around a little bit and have a bit of time before it pushes higher, if there is any kind of escalation in regards to what we're currently seeing, or what is currently happening in regards to Iran US. So the 60-day final deal deadline is being reached today on the 17th, so Monday the 17th today. There's no update as of right now, but the fact that this has been a known date since June, it makes sense based on everything that I'm seeing in the market in terms of price, in terms of breadth, that that some sort of news is going to come out to give the market a clear reason to go in whatever direction it chooses to go in. So I feel like a clear catalyst is coming for that. And just touching on breadth quickly, the number of stocks making new monthly highs pulled back a little bit towards the end of the week, but nothing major. Similarly, for the number of stocks making 52-week highs, pulled back a little bit more, but the fact that the number of stocks making 52-week lows remains fairly unchanged and still below 100 is not really a cause for concern. The one thing that I am paying attention to the most, or that has caught my eye the most, is the fact that the Sotheby's primary breadth indicators, it was a balanced day to close the week last week. Not much movement from either side in terms of the 4% gainers or the 4% movers, but there's been a consistent or consecutive 10-day streak for buyers being in control, and it's actually the longest streak that we've had this year, and it just paves the way for sellers to begin to step in some way just to break the streak. And it might not be in a meaningful way, it might remain balanced, but ultimately it will eventually end at some point. And the fact that there's the kind of fundamental geopolitical factors to take into consideration as well, alongside price, it's kind of making me feel like that's going to come soon. So Bitcoin as well is also at an inflection point. It's had two inside weeks, which suggests that prices are fairly stable where they currently are, but ultimately it's the market's going to make a directional move or decision at some point. So what I'm looking out for now would be any daily closes through these key weekly highs or weekly lows, and potentially look to take the directional bias if or when that happens. So based on everything that I'm seeing, based on, I guess the biggest thing for me is breadth, and the fact that the 60-day deadline's hit, as well as August typically being a slow month, or not the best month in terms of returns for the market. I am definitely cautious coming into today. I'm not bearish. I'm not bullish. I'm not directionally biased in any way. I think there's no signs to get bearish. There's no reasons to get bearish here based on major indices. But at the same time, I'm not overly bullish here, because there's clear overhead resistance for the Qs, and there's this kind of, just it's not feeling as strong as what it has done in compared to prior rallies. So definitely cautious coming into today.